There's a moment every trader knows too well. You're staring at the charts. Maybe you've just closed your platform for the day. Maybe you promised yourself you wouldn't take another trade, and then suddenly, the market makes a big move without you. A currency pair explodes in one direction, the stock you were watching breaks through resistance, Bitcoin jumps by thousands in minutes, and you sit there frozen. At first you feel regret. I knew this was going to happen. I saw it coming. But then, regret turns into panic. You think, what if it keeps going? What if this is the big one? What if I miss the opportunity of the month? That's when you open your platform again, throw discipline out the window, and dive into the move late, chasing after something that's already gone. Minutes later, the market reverses, and the candle eats into your entry like it was waiting for you. You close in loss or hold on in denial, and then you're left with the sinking feeling that you weren't following your system, you were following your fear of missing out. This is the cruel cycle of FOMO. It whispers to you in the quiet moments and screams at you when the market takes off without you. It convinces you that sitting on the sidelines is more dangerous than jumping in unprepared. It plays tricks on your mind, making you believe that opportunity is slipping through your fingers every second you hesitate. But the truth is, FOMO is not about the market at all. It is about your relationship with uncertainty, your insecurity about missing chances, and your need to always feel in control. The most dangerous part of FOMO is how logical it sounds in the moment. It doesn't come to you saying, throw away your rules, abandon discipline. No. It comes to you disguised as urgency. It tells you, you don't want to regret this later. You don't want to be the only one who missed it. This could be the move that changes your account forever. And because you don't want to feel left out, you act. But that action is rarely a decision made from strategy. It's a decision made from emotion. And in trading, emotion-driven decisions almost always lead to disaster. If you look back at your worst trades, you'll often find FOMO at the root. You saw price moving quickly, you couldn't stand the thought of missing it, and you jumped in late. Maybe you even doubled your risk to make up for the fact that you were entering late. Then the reversal hit, and what was supposed to be the opportunity of the year became another painful lesson. And the irony? You didn't just lose money, you also lost confidence. You told yourself afterward, I'll never do this again. But the next time the market made a strong move, the same urge came rushing back. FOMO is powerful because it is tied to deep human psychology. As social creatures, we hate being left behind. In ancient times, being left out of the group meant death. Today, in trading, being left out of the move feels the same way to your brain. It feels like you're losing something that everyone else is gaining. But the truth is, the market is infinite. There will always be another move, another setup, another opportunity. What matters is not the one move you missed, but whether you have the discipline to consistently execute the right ones. Missing one trade does not matter. Breaking your rules to chase it? That matters more than you realize. The traders who survive long-term understand something that FOMO traders don't. No one trade will ever make or break your career. The idea that this is the big one is a lie your brain tells you in the moment. Professionals know that trading is not about one opportunity. It's about thousands of trades over months and years. If you miss one, who cares? There will be more. But if you break your rules and lose big, you may not even be around to see the next opportunity. The pain of FOMO comes from attachment to short-term results. You see a move happening and you attach your emotions to it. You imagine the money you could have made, the profits you're missing, the screenshot you could have shared, and suddenly your mind is consumed. But that attachment blinds you to the bigger picture. The truth is, most of those runaway moves are traps. By the time you notice them, the best part is already gone. Institutions are unloading, and retail traders like you are piling in. The professionals wait for people driven by FOMO to jump in, and then they take the opposite side. What feels like an opportunity is often just bait. Before we dive deeper, let me share something that could completely transform the way you trade. If you've ever watched an account get wiped out because of fear, doubt, or overtrading, then you already know this. Trading isn't just about charts. It's 90% psychology. Think about how many times you've said, "If I had just held, I would have been rich." That thought is FOMO disguised as regret. You imagine an alternate version of yourself that was braver, that clicked buy, that held on, and you punish yourself for not being that person. But here's the reality. Even if you had taken the trade, you likely wouldn't have held it to the perfect exit. You would have taken profits early, or panicked at the first retracement, or gotten stopped out. That fantasy of the trade you should have taken is just that, a fantasy. And chasing fantasies in trading is the fastest way to destroy your account. Breaking free from FOMO starts with brutal honesty. You have to accept that you cannot and will not catch every move. The market is too big, too unpredictable, and too fast for anyone to grab them all. Even the best traders miss trades every single day. What separates them is not their ability to catch everything, it's their ability to stay calm when they miss something. They don't let regret push them into reckless decisions. They understand that discipline is more valuable than any single trade. Imagine two traders sitting at their desks. Both watch the same market. Price makes a big move. The first trader panics, jumps in late, loses money, and ends the day frustrated. The second trader watches the move, realizes it doesn't fit their plan, and lets it go. At the end of the day, the first trader feels like the market took something from him. The second trader feels nothing, because he knows missing trades is normal. Who do you think lasts longer in this business? At its core, FOMO is a battle between short-term emotions and long-term vision. If you live for short-term gratification, you'll always be chasing. You'll always be jumping into trades too late, taking risks too big, and feeling regret too deep. But if you live for long-term consistency, you'll let go of the need to catch every move. You'll learn to sit on your hands when the urge to chase arises. You'll understand that protecting your capital and following your process are far more important than feeling included in a move. The truth that every trader must accept is this: you don't need every opportunity. You only need the right ones. The market will always give you more chances, but it will never give you back your capital if you throw it away chasing. So the next time you feel the itch of FOMO, remind yourself that the only thing worse than missing a trade is forcing a bad one. Letting go is not weakness, it's discipline. And discipline is the only thing that separates traders who last from those who vanish. Every trader at some point believes that the market is constantly offering them golden chances, that if they blink, they will miss something that will never return. This belief is what fuels the panic of FOMO. The idea that this is the one, this is the chance, this is the trade that will change everything. But if you step back and look at the bigger picture, you realize the irony. The market is infinite. Yet the human mind treats every move as if it is the last. Picture a trader sitting late at night, his charts glowing on the screen. He has already hit his daily limit, already told himself he was done, but then he sees a sudden breakout forming. His pulse rises. He tells himself, "If I don't take this, I'll regret it forever." He convinces himself that this is a once-in-a-lifetime opportunity. But what he doesn't realize is that the same setup will appear again tomorrow, next week, and next month, in different markets, in different forms. The illusion of opportunity makes him believe in scarcity, when in truth, the market is abundance. FOMO thrives on the illusion of scarcity. Your brain sees price move fast and interprets it as something rare. It thinks, if I don't grab it now, I may never see this again. But the truth is, the market repeats itself endlessly. Patterns repeat, cycles repeat, emotions repeat. What feels like a unique, once-in-a-lifetime move is usually just another version of what has already happened thousands of times before, and will happen thousands of times again. The illusion is not in the chart, it is in your mind. The professionals understand this. They don't panic when a trade runs without them because they know another one is coming. They see missed moves as irrelevant in the grand scheme of things. But the struggling trader clings to the idea that each move is unique and irreplaceable. That's why he jumps in late, chases trends, and over-leverages, because he thinks he's about to miss something he'll never see again. Consider the gold rush of the 1,800 seconds. Thousands of people left everything they knew to chase the illusion of opportunity. Most ended up broke, sick, or dead. A few got rich, but most were left empty-handed. The illusion of opportunity convinced them that if they didn't run after the gold, they would miss out forever. But in reality, many of those who stayed behind and built businesses to support the miners ended up wealthier than the miners themselves. Trading works the same way. The illusion of opportunity makes you rush into the gold mine of the market without preparation. But in truth, the real wealth comes from patience, discipline, and playing the long game. Think about the times you felt the strongest pull to jump into the market. It wasn't when the chart was calm, when price was moving slowly, or when setups were clean. It was during chaos, fast-moving candles, breakouts, surges. In those moments, your brain tells you, this is it, don't miss it. But those are often the worst times to enter. That rush of movement is usually the tail end of the move, the point where professionals are unloading and amateurs are piling in. What feels like opportunity is often the trap. The market is designed to prey on FOMO. Big institutions know how retail traders think. They push price hard in one direction, let the headlines amplify the move, and watch as traders with no plan rush in. Then they reverse the market, leaving the FOMO-driven traders stuck holding losses. This is not an accident. It is strategy. They know that the illusion of opportunity blinds people, makes them forget their rules, and forces them into reckless decisions. There's a cruel irony in FOMO. The more you chase opportunities, the more opportunities you actually miss. Because every time you take a reckless trade, you put your capital at risk. And when you lose that capital, you limit your ability to take the real opportunities when they come. FOMO traders spend so much energy chasing shadows that when the true setups arrive, they are either too drained or too broke to take them. It's like someone running after every shiny object they see on the street. They waste their time and energy chasing scraps, while the person who waits patiently finds the real treasure. In trading, the patient trader who waits for their setup will always outperform the one who is constantly reacting to every move. The illusion of opportunity destroys the impulsive trader, while discipline preserves the patient one. But here's the hardest truth. Breaking free from the illusion of opportunity requires trust. Trust that the market will give you another chance. Trust that your strategy will present setups again. Trust that missing one trade does not mean the end of your career. Most traders don't have this trust. They operate from fear, from insecurity, from the need to always be in control. They don't trust the process, so they jump at everything, and that lack of trust is exactly why they fail. The great traders you admire didn't get there by catching everything. They got there by waiting, by letting go, by learning to see through the illusion. They knew that not all moves matter. They knew that being out of the market was often safer than being in it. They knew that opportunity is not rare, it is endless, but only for those who can control themselves long enough to see it clearly. There's a story of a trader who once missed a massive rally in the S&P. He had been watching the levels for weeks, but wasn't comfortable with the entry. When the move finally came, he sat there in silence, watching the chart rocket higher without him. Everyone else in his trading group was celebrating, talking about how much they made, and he felt like a fool. But instead of breaking his rules, he reminded himself, the market will always be here. My job is not to catch every move, but to protect my capital and wait for my setup. Weeks later, the same pattern appeared again, this time with his exact conditions. He entered, and it became one of the best trades of his career. Meanwhile, most of the traders who had jumped in during the earlier rally had already given their profits back in reckless trades. That one trader understood the truth. The market will always offer opportunities, but only discipline allows you to actually keep them. This is what the illusion of opportunity hides from you. The market is infinite, but your capital is not. You can always catch another trade, but you can never undo a reckless loss. If you blow your account chasing one illusion, you may not survive to see the real move when it comes. That is the true danger of FOMO. It convinces you that missing a trade is painful, but the real pain is missing your entire future because you couldn't control your urge in the moment. The traders who win don't chase, they wait. They let the amateurs burn themselves out chasing every spike, and then they calmly step in when the odds are in their favor. They understand that opportunity is not something you chase, it is something you prepare for. And when you are prepared, you don't need to fear missing out. Because you know that even if you miss one move, another will come. The market is not going anywhere. The only question is whether you'll still be here when the next one arrives. So the next time you feel the illusion pulling at you, remember this: the market is not scarce, it is abundant. The opportunities are not rare, they are endless. The only thing rare is discipline. And the trader who masters discipline will never again be fooled by the illusion of opportunity. There is a price for everything in trading. Sometimes that price is visible, like the stop loss you set or the margin you use. Other times, the price is invisible, and it doesn't show up on your platform but in your psychology, your emotions, and your future potential. FOMO has one of the highest hidden costs in all of trading. The market makes sure you pay for chasing, and the payment is usually heavier than you expect. Think about the last time you jumped into a trade without a plan. Maybe you were scrolling through your phone and saw someone post about how a coin or stock was exploding. Maybe your chart was already open, and you saw a giant candle moving without you. You felt that sharp stab in your stomach, the mix of excitement and fear, and before you even thought it through, you hit the buy button. At first it felt amazing. You were in. You weren't left behind. For a moment, you were relieved. But then the chart turned. The move slowed down. The candle reversed. What felt like an opportunity turned into a nightmare. You panicked, closed in the red, and sat there shaking your head, wondering why you couldn't just stick to your plan. That is the cost of chasing. The cruel part is that chasing feels logical in the moment. Your brain convinces you that entering late is better than missing out entirely. It whispers, even if I get a smaller piece, it's better than nothing. But the market rarely rewards that kind of thinking. By the time you feel the urge to chase, the move is usually already exhausted. The professionals have already entered and are preparing to exit. You are the liquidity they need to take profit. You are the buyer at the top, the one who keeps the market alive for them. You are not a trader in that moment, you are food. The cost of chasing is not just the immediate loss, it's the ripple effect that comes afterward. One bad chase often leads to another. You tell yourself, I'll make it back on the next one. You double down, desperate to prove you were right, but instead of getting back on track, you dig yourself deeper. A single mistake turns into a string of bad decisions, and before you know it, a week's worth of profits is gone in a single day. The cost of chasing is never just the trade itself. It's the damage it does to your discipline, your patience, and your belief in yourself. FOMO-driven trades are usually the most expensive because they combine two poisons: poor entries and emotional exits. When you chase, you enter late, which already puts you at a disadvantage. Then, when the market inevitably turns, you panic and exit too early or too late. You never catch the middle, the meat of the move. You're always paying more, receiving less, and suffering greater stress. The professionals call this the retail tax, the hidden cost that impatient traders pay to the market. Every time you let FOMO push you into a bad trade, you're paying that tax. There's also the opportunity cost. Every time you tie up your money in a reckless chase, you're missing the chance to take the real setups that align with your strategy. Your capital is stuck in a bad position, and when the clean entry comes, you can't take it. You're trapped. The market doesn't just punish you by making you lose, it punishes you by making you unavailable when the real money shows up. That is one of the most painful costs of chasing. Watching the trade you should have taken pass by while your money is bleeding somewhere else. Over time, the cost grows heavier. Not just financially, but mentally. Every bad chase eats away at your confidence. You start doubting yourself, doubting your system, doubting whether you even have what it takes to trade. You hesitate on good trades because the memory of losses haunts you. You become hesitant when you should act, and impulsive when you should wait. Slowly, your edge erodes, not because the market changed, but because FOMO drained you. Some traders never recover from this. They blow accounts, not because their strategies were bad, but because they couldn't stop chasing. They confuse activity with productivity. They think that being in the market all the time means they are doing the right thing. But in truth, they are feeding the machine, paying the hidden costs again and again, until their capital is gone. FOMO doesn't just make you lose, it makes you quit. But here is the deepest cost of all: time. Every time you chase, every time you let emotions control your decisions, you are wasting the one resource you can never get back. Money can be replenished. Accounts can be rebuilt. But time cannot. The months you spend going in circles because of FOMO are months you could have spent building real consistency. The years wasted repeating the same mistakes are years you could have spent compounding steadily. This is the saddest cost of chasing. The traders who could have been great but never gave themselves the chance. Because they spent too long running after illusions instead of building discipline. Ask yourself this: how many trades have you taken in your career out of pure FOMO? How many times did you know it wasn't part of your plan, but you did it anyway because you didn't want to miss out? Now imagine if every one of those trades had been avoided. Imagine if instead of losing that money, you had preserved it. Imagine if instead of damaging your confidence, you had protected it. Where would you be right now? The answer to that question is the true cost of chasing. It is the difference between the trader you are and the trader you could have been. The good news is, the market doesn't care about your past. It doesn't hold grudges. The costs you've paid don't have to define your future. The only thing that matters is what you do next. If you keep chasing, you will keep paying. But if you stop, if you accept that not every move is yours to take, you can begin to break free. The key is realizing that the cost of chasing is always higher than the cost of waiting. Waiting feels painful in the moment, but it is free. Chasing feels exciting, but it is expensive. Every great trader learns this truth eventually. The question is whether you will learn it while you still have capital left. Trading is not about catching every move, it is about surviving long enough to catch the right ones. The traders who survive don't pay the cost of chasing because they don't chase. They wait. They preserve. They outlast. And that is why they win. The market is infinite. Opportunities are infinite. But your account is not. Every time you chase, you make that account smaller. Every time you wait, you give yourself a chance to grow. That is the choice you face every day. Pay the cost of chasing, or collect the reward of patience. When you finally realize how expensive FOMO really is, you start to see the market differently. You stop thinking, what if I miss this move? And start asking, what if I destroy myself chasing it? You stop caring about what happens today and start focusing on what happens over months and years. That is when everything changes. That is when the cost of chasing no longer applies to you. That is when you start to keep what you earn instead of constantly giving it back. Because the truth is, you can't avoid paying a price in trading. Everyone pays something. The only question is whether you will pay the price of patience or the price of chasing. One costs you nothing but time. The other costs you everything. If you've made it this far, you're already ahead of most traders because you're working on your mindset. Remember, charts and strategies will only take you so far. What separates a consistent trader from the rest is how they think. If you want to keep leveling up, make sure to hit that subscribe button, drop a like, and share your thoughts in the comments. Do you want more videos like this? Let me know. And as always, stay disciplined, stay patient, and trade smart. I'll see you in the next one.